Are you wondering what's going to happen to home prices this year? And are you reading about rising interest rates or impending market crashes? Well, we are going to unpack all of those issues right now. I am Paul Jonas with the Jonas Homes Group. We are powered by eXp Realty, and we are living, loving Las Vegas. Let's start with a quote from Bill McBride of Calculated Risk. It is possible that rising mortgage rates will slow the housing market, or the Fed might raise rates sooner than expected due to the recent pickup in inflation. But I believe one thing is certain: inventory will tell the tale. So he's saying that inventory will drive market prices this year. The reality is that listings are at record lows. There are many reasons for that, and we've talked about that over the past year. The bottom line is inventory drives markets. This graph here put out by Realtor.com shows year-over-year inventory levels from December of 2020 to December of 2021. Now, inventory across the country is down 26.8%, as you can see. Most of the country is that brown color between down 15 and 30% year over year. Here in Nevada, inventory is down 30% year over year, but buyer demand continues to surge, and we will not realize our full market potential as we can't sell what we don't have. So if you look at inventory going back to January of 2019, you can see that inventory has slowly declined since then. Currently, across the country, on average, we have 2.1 months of inventory. And here in Nevada, we have 1.5 months of inventory for all residential real estate types. If you are a buyer in this market, you may be worried, but don't be. Homes are selling, which means buyers are getting into homes. It just might take a little bit longer than in a normal market. And if you're a buyer, be prepared to lose a few offers. If you have an experienced full-time agent who knows how to structure an offer, they can help you navigate this market. The undeterred, educated buyer will get into a home. If you're about 3 to 6 months away from buying a home, this is a great time to start interviewing agents, clean up your credit, fine-tune your search criteria, and save as much money as possible. Doing these things will make it more likely that a seller will accept your offer over others. The effect of the pandemic has kept some sellers from listing their homes on the market, but this has not deterred buyer demand, and they continue to come to the market. We can see this in showing time's next graph. Showing time is a leading indicator of buyer demand. And if you look at November 2020, which is highlighted in the blue bar, versus November 2021, which is the highlighted in green, we're ahead of last year's market. And these numbers help us determine the current health of the real estate market. As you can see, it is not slowing down. Now, looking at showings over the past 5 years, we are blowing away pre-pandemic numbers. And you can see November 2017, 18, and 19 in the gray as compared to 2020 and 21, where showings increased to the highest levels in 5 years. Now, many articles have been written to try and paint a picture of real estate doom and gloom because of the pandemic. Like we spoke about all last year, these articles are proving to be clickbait. It certainly has had an effect on people listing their homes, but buyer demand has continued to grow during the pandemic. Michael Lane from Showing Time showed this. Showings traditionally lag during the holiday season, but the data we're seeing tells us that buyer demand remains strong. The fact that every region showed a year-over-year increase indicates that buyers are undeterred. It speaks to their desire to keep searching for their next home. So, even though we went through a pandemic, buyers aren't deterred. So you can see that buyers who continue to search will be rewarded and eventually move into their new home. The next logical question is, are increased showings turning into contracts? Well, if we look at the same period over the past 5 years, you can see the pre-pandemic pending sales in the gray. These are what I like to call the normal years. And if you look at 2021 and 2020, you can see that pending sales have increased during the pandemic. So as we have bigger demand, we continue to sell more homes than we did before 2020. It's a simple matter of we need more sellers. Now, you may be asking, where is the opportunity or motivation for sellers? Well, it's in their home equity. CoreLogic's home equity report for the third quarter 2021 showed that the average homeowner across the country with a mortgage gained $57,000 in equity year over year. That is a monster number. And the average year over year equity increase is 31.1%, giving a total equity of $3.2 trillion for homeowners with a mortgage across the country. They go on to say, this summer, home price growth reached the highest levels in more than 45 years, pushing equity gains to another record high. Equity is definitely the shining star in real estate today. If you're thinking about selling, this is a great time to tap into that equity and improve your position. Maybe your home no longer fits your needs. You can use that equity to buy a home that suits your needs better, or it's time to downsize to a smaller home and maybe pocket some of that equity or even shore up your retirement funds. One thing is for sure, it's hard to remember a better time to sell your home. If you look at this next graph across the country, you can see an average year over year equity growth of $56,700 for the third quarter. Here in Nevada, that surge was $80,000. So if you were a homeowner this past year, congratulations. You have experienced the power of building wealth through real estate. Another report came out, and although I didn't include this in this presentation, showing that in every major city across the US, including Las Vegas, it was actually cheaper to own a home than it was to rent if you consider the equity growth. Frank Martell from CoreLogic said this: not only have equity gains helped homeowners more seamlessly transition out of forbearance and avoid distress sale, it enabled many to continue building their wealth. This last year has shown how home ownership is a long-term wealth building tool and highlights one of the many benefits of being a homeowner. Odeta Cushy at First American said this: US households own $36.8 trillion in owner-occupied real estate, $11.5 trillion in debt, and the remaining $25 trillion in equity in inflation-adjusted terms. Homeowners had an average of $294,000 of equity in Q3 of 2021. It's a historic high. These are stunning numbers. It really highlights the strength of the real estate market to have that much equity on average across the country. This is why homeowners, or those thinking about being a homeowner, should have more certainty in this market. And as we go over the data, you can see why experts believe we are nowhere near the same market that we had in 2007. Now, based on those numbers and past seller trends, we know there is a lot of pent-up selling demand, and many of you are thinking about selling, but not sure if the timing is right. These are all great questions, and you are right to ask those questions. It really just depends on your goals and what you're trying to accomplish by selling your home. Preparation and education is a key component of success. Now let's talk about expectation for the housing market in 2022. Uncertainty creates fear and makes it difficult to make the right decision. Educating yourself on market conditions and learning what the experts expect will help you make more informed decisions about your future, creating more certainty when making those decisions. So what are interest rates projections for 2022? Many of you know I don't like to project interest rates in the future. I really feel it's a fool's game. This is why we look at what the expert projections are. In this chart, Fannie, Freddie, the National Association of Realtors, and the Mortgage Banker Association have projected interest rates for 2022. They are projecting those rates to increase somewhere between 3.5% to 3.7% for the second half of this year. The current average on a 30-year fixed rate mortgage is around 3.2%, up slightly from 6 months ago. So we're already seeing slight increases, and it sounds like we are expecting to go back to where we were for the past 10 years, somewhere between 3.5% and 5% on a 30-year fixed mortgage. it's still a historically great rate. Remember last spring when all the clickbaiters were writing stories about forbearance and a flood of foreclosures coming to the market and driving prices down? Well, like we said all last year, the numbers didn't support that. And forbearances have finally fallen below 1 million to about 890,000. Those are the homes that are currently in some forbearance program from the pandemic. Well, that represents about 1.6% of active mortgages, and we are not expecting foreclosures to be an issue this year. About 4 out of 5 of those homes in forbearance will come out of forbearance with a plan in place to right-size their mortgage and move forward without going into foreclosure. In 2022, delinquencies will be a non-issue. Now, Maya Claire from CoreLogic said this about foreclosures. We see a little bit of an uptick in foreclosure rates in 2022, just an uptick though, from an extraordinarily low level. We're not expecting to see a big increase. We expect delinquency rates overall on home mortgages to actually continue to remain quite low. Again, I think this will be a non-issue as homeowners will have options considering the huge equity gains we have seen over the past 2 years. The other issue I want to address is pricing. This chart shows home price acceleration rates going back from January 2021 to October of last year. The question is, has home price acceleration peaked? This is the question that is on everyone's mind. Now, note that we are starting out at 10% appreciation, which is already historically high, and then we are seeing big increases since then. Now, this is year-over-year numbers, so keep that in mind. The big question here is, have prices peaked or have they plateaued? Now, I personally don't think at this point that prices are going to slide down. Consider the current economic landscape: inventory shortages, rising lumber costs, rising labor costs, rising land costs, and inflationary pressures. It just doesn't make sense. Keep in mind that this graph is not showing depreciation, but a slowdown in the rate of appreciation. That's a very important distinction. What rate of appreciation are experts forecasting for 2022? The average forecast is 5.2%, ranging from 7.4% to 2.8%. So it looks like the experts are expecting historically normal appreciation for 2022. It should be noted that many of those experts increased their forecast slightly up from last month, so they must be seeing an upward trend in appreciation. When we look at interest rates, forbearance, prices, low supply, and high demand, we should see increases in home appreciation this year. So overall, I do think that 2022 will be another strong year for housing, albeit a little bit higher mortgage rates. And we do think home sales will continue to rise and actually reach a 16-year high in 2022. Buyers will be in full force this year, and I believe that sellers who have been waiting for the right time to list their home will increase slightly as sellers take advantage of equity gains and improve their portfolio or transition into a home that suits their needs better. As always, I include my references so that you have confidence that our sources are legit. Please feel free to reach out to us if you have any questions about selling or buying your home. And as always, thank you for taking the time to better educate yourself on market conditions. We wish you a happy new year and hope that 2022 is the best year yet for you and your family. I'm Paul Jonas with the Jonas Homes Group. We are powered by eXp Realty, and we are living, loving Las Vegas. We'll see you in February.